Basically, we're going to talk about the Treasurer and the tax collection divisions here. See if I can make this work. Okay, the department consists of the Treasury and tax collection. That's one entity of it. Of that, we have 5.6 full-time employees, basically. Budget of $998,000. The other entity is the Office of Revenue Collection. We have 2.3 full-time employees there. Budget of $205,000. Tonight, I just want to talk about the Treasury and tax collection portion of it. So the tax collection is actually a three-department item. Todd Retzloff, the assessor, his department starts off by setting the values of all the parcels. Once he's done with that role, he now passes that off to Nate Black, who then extends that role, certifies that role, and then gives that role to me to bill and collect. So it's pretty much a county-wide team effort to get these tax bills correct and out there. And as you'll hear in the future, one of those challenges is our current software system. It's antiquated. The three departments, actually 4 departments with Donna Johnson's, have been looking for other software to help fix that. The property taxes, you have basically 2 roles that everybody really knows, secured and unsecured. Secured taxes, basically you think of as your home, you have property taxes on your house. Another way of thinking of secured taxes is anything that's secured to the ground. So if you own land, have a building on it, secured. You know, a commercial building secured. So anything attached to the land is secured taxes, the easiest way to look at it. Your unsecured, now we're talking your business property, machinery, fixtures, tables, chairs, anything that you can pick up and walk off that business usually is considered unsecured. And along with that, you're going to find boats and aircraft. So start with last year, well, we'll start with this year, current fiscal year. The department issued 34,730 tax bills. Total taxed out at just under $107 million. And up through December 31st of this year, we've collected $63 million of that. So about 63% of the secured taxes is already in the county. By April 10th, we'll pick up the lion's share of the remainder. Last year, for 14-15, we issued 34,692 tax bills. $102 million was billed, $100,000 was collected in the current year. So we had a collection rate of 98.9%, which puts Sutter County in the top 25 percentile for the state, 13th overall as far as our collection rate. And over the past 7 years, starting in 2008, the department has continued to increase our current year collection. We started off in 2008 at 96.3%. Last year, we were at 98.9%, and that's totally the credit of my staff. They work really hard. We've got new tools on. They've come up with new ideas. We have postcards we're using out of very effective as reminders to get the delinquent taxes coming quicker. The staff, gets all the credit for this. They're very hard workers. They're very dedicated to this county. The unsecured role, which presents probably the most challenges as far as collection. Back in where our business property, boats, aircraft. We've issued 3,162 bills this year. We've only processed the first 2 cycles. Unsecured goes out in 3 cycles a year. The first cycle is massive, so it's a lion's share, probably like 6 million of this. Second cycle is probably the 400,000. Third cycle will probably be in the thousands. It's just the way it works. Of that 6.4 million billed, as of 12/31, we've collected 5.9 million of it. So we've already picked up 93% of the 2015-16 unsecured taxes this year already. Last year, in 2014, we sent out 3,426 bills. Again, charged at 6.4 million, and we collected 6.4 million. We had a collection rate for last year of 99.1% in the current year. Comparing us to the other 58 counties, we're second in the state of California on unsecured collections. The only county that beat us out was Alpine County, and she actually mailed out 324 bills. No. She basically made the light in the face, so I feel like we should discount that one. Again, collection rates in that role, 2007, we were at 87.5%. My staff has brought that up to that 99.1%. You have excellent staff in that department. Now the more fun part is Treasury. The Treasury is your county's bank. We provide a full range of banking, credit cards. We've got a contract with that all departments in the county can use with your permission to work with. We have wires coming in, we wire money out, we handle the payroll wires, everything. So within that, we have the pool treasury. It's made up of two major groups. You have required participants and voluntary. Required participants are all the county's departments, and all the school districts are required to be in the pool by law. Voluntary participants mainly are your special districts. Most of them can opt in or out. Most are in because they do not want to have to do the auditing and everything that's required by law if they're not in the pool. So currently our pool makeup, as you can see, is 55% of the pool is made up of non-general fund county funds. Schools making up 36% of that. Special districts is 6%, and the general fund is only 3%. Now this is at 12/31, and so this is constantly a moving target. It changes from here to there. At that time, there was $263 million in that pool. And to give you an idea of what goes on in that little department, deposits that were taken over the counter, this is citizens and departments walking into the department and handing cash checks over to my staff. My staff processed almost $152 million over the counter. So that much money was transferred right inside the building. The back office, which takes care of lockbox, incoming wires, electronic fund transfers, they handled another $320 million. The investment activity, where you have maturities and calls, along with coupons, was another $264 million, almost 265. So total receipts into the Treasury last year was $737 million. Now, as we bring money in, we also have to honor the money going out. So the warrants that Nate Black's department creates and the schools, we have to cover that. So basically on warrants, EBT payroll was $442 million went out, and then the pool treasury investment process was another $290 million outflow. Pool treasury portfolio. Now this is our investments. This is totally controlled by government code section 53601 through 53645. And those code sections basically box in what a California treasurer can do with a portfolio. It specifies what's an acceptable investment, what the terms of those investments can be, and the class limits, how much of each one you can have within that portfolio. And the objectives of our portfolio is always going to be safety, liquidity, and yield. We call it investing on the sly. Safety, the main goal of that portfolio is to protect every dollar that goes in. We do not want to lose any principal. If you put a dollar in, that dollar needs to be there tomorrow. Liquidity, that goal is it's a management goal of the portfolio to be sure that there's enough liquidity in the pool at all times to cover any obligation of this county, special district, or school district. And then the third being yield. That's the last thing we think of. It's necessary to look for a reasonable return on your investment. Otherwise, you're not doing the taxpayers any favors if you're not working on making some money for them. But we never discount safety or liquidity for yield. Now, the pool portfolio as of December 31st, which is also on tonight's folder, there was $242 million invested. 71% of that was in agency notes, which is basically your Freddie Macs, Fannie Mae's, Federal Home Loan Banks, Federal Farm Credit Banks, assets that are guaranteed by the United States, basically. These are extremely safe, AAA, AA plus ratings. Those you can have, we're unlimited on what we can buy of those. The next category is the medium-term notes. These are your corporate papers. A little higher yield, a little higher risk. We're talking Wells Fargo Bank, JP Morgan, Chase, General Electric, Oracle, corporations like that we invest in. Our portfolio, we have a requirement that any asset has to have an A or better credit rating in both Standard & Poor's and Moody's. Since I've been treasurer, we've had, I think, 2 assets in 7 years that have dropped off that, gone down to a B AAA. We watch it for 1 month. If it doesn't recover back into that A category, we sell it. And unfortunately, The downside of doing that is we just really got rid of some, we got rid of risk, which is good, but we also lost usually an asset that's paying a very high yield. But for safety, to preserve that dollar, we move it on. So basically, that's our department. Like I said, it's much quicker than the others. So I'd be happy to entertain any questions you have.
Mr. Chairman?
Sure. Go ahead.
Steve, thanks for that presentation. It was quite a bit of information as well, and it's good to see it. Commend you and your staff on the statistics you gave us there. I think it was number 13 or top 25% on the secured property, and number 2 on the unsecured.
I left one stat out there off also by accident. Our portfolio. In the state of California, the portfolio was second in the state for gross yield, and we are third in the state for net yield. So the portfolio for this county is performing extremely well if you look over the other 58 counties.
Wow. Well, congratulations. I need to add that to the commendation as well, because that is a big statistics to cover. And I think a lot of people don't realize the amount of money that comes through. And I mean, just even you describing over 151 million coming over your counter.
Over the counter.
Yeah, it's pretty substantial. So I want to commend you on the job you've been doing, and giving us those rankings is no small deal. It's a big deal. And protecting our money, the safety, the liquidity, and the yield. I like the acronym SLY. I think that's very good to think about, and it appears that you're passionate about it and you're watching over it very carefully. So kudos to you and your staff, and really appreciate the presentation and a good, clear understanding of how everything works. Too. It's very good. Thank you.
Excellent staff, and they work extremely hard and well together.
Thank you.
Thank you, Steve.
Any other comments?
Yeah, Mr. Chairman, I'd like to also thank you, Steve, for your department for working so hard and keeping Sutter County fiscally solvent. I'd also like to commend you on working with other department heads, working with our assessor, Todd Retzlaff, as well as our auditor, Nathan Black, and, coming to a cohesive unit and making sure that, Sutter County tax rules are all together on board. And like I said, as a team and working as a unit, definitely exemplifies your department. One quick question, though, that I did have to ask is that on the secured property taxes, when people aren't paying those property taxes, what measures and what do we do to utilize? What do we do? What programs do we use to make sure that we get those monies?
We start off by notifying them.
Okay.
We used to send out letters. We quit doing that. We're now sending postcards. Depending on how far along they are, they get a fresh postcard. We found that the postcard is more effective. It's very inexpensive for us to mail out, and it draws more attention.
So you're saying I still have a little bit of time, right?
Oh, they have 5 years.
Okay, thanks.
They have 5 years.
All right.
Actually, if you don't want to pay your taxes, that's okay. I look at that as an 18% bond.
Nice. All right. Thank you, sir.
Thank you.
Thank you. Thanks, Steve.